Now, that rising dollar referred to by David Crombie is making it especially tough for the beef industry and for grains too. But you know something? It can't be too tough. After all, why would foreign investors be interested in our agribusiness if they couldn't see a very profitable future? So let's start the price check with the action in Chicago, where prices bounced strongly after a very ordinary start to the week. Corn and wheat prices were down overall, but lifted Thursday on the back of export news. That's a new contract for soybeans, with China doing its utmost to cool demand without apparent success. And action was similar in local markets, down early but recovering later in the week. Milling wheat for delivery January in New South Wales finished at $253 a tonne, while on the other side of the continent, WA wheat for the same month fell to $284 a tonne. Meanwhile, trading was choppy on spot markets, with some relief about the warmer weather, but concern too about possible further rain. So wheat and canola fell. Sorghum also went down, and the tip is for a bumper summer crop. Let's stay on the farm and check cotton and sugar, and both commodities had extraordinary weeks. After jumping on a toboggan early in the week, the cotton price rebounded in style. It's still down for the week, but the bounce was considerable. But commentators are wary, suggesting cotton might be a classic dead cat bounce. And the sugar price is all about the weather. Too much rain in both Australia and India, looking set to cut available volume. The March contract came back after a slow start, another commodity which finished down but on an upward trend. Now to wool, where the market steadied somewhat after a couple of cracker weeks. In fact, there's little doubt a lot of wool was passed in last week at prices that would have been very acceptable just a fortnight ago. And delving deep into the figures, it's worth noting that the wool measuring 16.5 to 18 microns has lifted 40%, or about 500 cents, since the start of the season. Here's how wool has moved in recent times. You can see how it came off that disastrous low base in the 90s, went close to 1,200 cents before sliding, and now it looks headed back to that figure again. Last week, the Eastern market indicator closed at 1,031 cents. As usual, China topped the buyers list. To livestock now, and the seasonal peak in lamb throughput is with us, and this has flattened the prices somewhat. In contrast, restockers are pushing sheep prices north. So the lamb indicator is more or less steady, but check that mutton price, another pointed to a renewed interest in sheep from a wool perspective. Now, pigs are in demand as well for the obvious festive reasons. Both indicators have lifted 2 cents a kilo. And last week, pig farmers in Australia voted to stop using sow stalls by 2017. As with any major change, there will be a cost. Here's an estimate of the financial impact on the pig industry.
Now, that's a very difficult decision because it's going to cost the industry potentially $100 million or more. So clearly very expensive. But if it's going to happen anyway because consumers want that to happen, then that's something the industry's got to face up to.
Doesn't sound much if you say it quickly. Finally, to the cattle game, and wet paddocks continue to create havoc with supply. Numbers are down because cattle can't be mustered. Plus, there's the incentive for producers to rebuild herds after years of drought. So, all categories lifted. I'm told numbers are so scarce in some areas, meatworks are actually reducing shifts. This left the Eastern Young Cattle Indicator at $3.72, up 6 cents for the week and up 66 cents since November of last year. To live export prices now, and reports from the north indicate trade is slow but steady. Permits remain the biggest issue. So Darwin prices are much the same as last week. A few boats were loaded in recent days, including a shipment of breeders to Malaysia. Now, the importance of the live trade to the beef industry in Australia cannot be underestimated. It underpins a massive part of the economy across northern Australia. Its influence on property prices in particular is critical. At the other end, our major market of Indonesia, there's a national commitment to becoming self-sufficient and reducing the reliance on imports, both on the hoof and in the carton. So the allowable weight of cattle has been set at a maximum of 350 kilos, and the actual number imported has also been cut. The ABC's correspondent in Indonesia, Matt Brown, has been investigating the impact this policy will have on the local beef industry.